So Bitcoin, gold, and other assets are dumping, even when oil is dumping. Shouldn't it be the case that they rally as this thing dumps? Well, it appears that we have yet another enemy. And that enemy of ours is the dollar. This thing has been in a humongous rally. Now, some might look at this and say, oh, well, it's people or institutions or countries having confidence in the US, which is why it's that much high. But no, this is actually bad for US manufacturing, and so therefore, it will be bad for jobs. You see, you don't want to have a very high dollar because it will mean that other countries will have to pay more in exchange to buy anything from the US. So you want to have the dollar somewhere lower than 100 here. If you want a booming economy, which means more jobs for people and therefore more money in people's pockets, then you want a lower dollar here. Going too high should not always be interpreted for, confidence in the US. That could be bad for US residents or citizens. So, with all that aside, what can we see on this chart? This is on the weekly time frame, and from here you can see the dollar. That is from the macro perspective, yeah? And the first thing we will need to do is to invert the chart like so. This is like a counter to any biases we might have. So, we have rules already, yes? After 3 drops, we start to expect the bottom anywhere around that 3rd drop. We wouldn't be expecting a deeper crash after the 3rd drop. So here, we have had the first drop already right here. Here we had the 2nd drop, and here we had the 3rd drop. Just in case you are not actually following. After this big move to the downside right here, that is the big move to the downside here, you see that we had a consolidation, yes? And after that, we had another big move to the downside. And after the big move to the downside, we had a consolidation like so. Even after that, we had another big move to the downside like so, and yet another consolidation. So we are expecting that this right here must have been the bottom, and if it was not, then the bottom will be slightly lower than that. It can't be yet another deeper, bigger move like this or before that. So those are the rules, and ideally in such a situation we'd be expecting a retracement of this particular move to the upside right here. So possible retracement to the downside right here, and then now a bigger reversal of the entire move to the downside. We are clear, yes? So as you know, this is an inverted chart. So if we bring it back to normal like so, you see that the retracement back to the upside right here will mean that assets like gold, Bitcoin, and the stock market, well, they will most likely be in a dump. But that dump will not be, it won't be for long, because again, we are just expecting a retracement to the upside right here. And then after that, we will then now be waiting for a bigger move to the downside that starts an entire thing, yeah? Entire thing means that it's